local manufacturing will continue to be dependent on a strong demand. In the second quarter, we'll see what the results say when we survey it. However, threats from increased competition from imports because of the rand in part remain and likely to increase. Why do we say likely to increase? This is more analytics than what comes from survey. Is that globally there is, between China, India, Brazil, increasingly countries like Vietnam, South Korea, and so on, there is a growing recognition that their manufacturing base is important for their social stability, and they are resorting to all kinds of support measures for their manufacturing base. We often cite rand as a factor, and rand is important, currency is important for any global competitiveness, but there are other measures that are as important in many cases. Support for local manufacturers, rebates that some manufacturers get, subsidies that others get, in all kinds of open and not so open ways. So if we look at the total picture of manufacturing support that comes out of India or China, South Korea, increasingly Brazil, we see that unless South Africa takes measures, our manufacturing is going to be on the back foot, not only because of the strength of the rand, but also because of other measures that are introduced. So that's a very important policy issue that needs really serious engagement. That it is one thing to say our manufacturing is not competitive globally, but it's another thing completely to say that our manufacturing cannot withstand pressures of imports, because those who export into South Africa benefit from a whole host of measures. And of course, there is now a new wave of uncertainty spreading globally, and so much so that you would have heard Bernanke now looking at QE3. And of course, when that comes to pass, or even being debated, countries consider their options. US is stuck in a debt standstill between the administration and the Congress. Europeans have their own debt problems. All of these compound on top of the political issues that we have to create vulnerability for growth itself, which undermines the demand for manufacturing. And of course, sustained and what we call it compounded negative impact, meaning year after year, the negative effects of, be it the currency, be it neglect of the manufacturing, they compound and they add up to undermine the competitiveness of our sector. And finally, on top of all of this, the manufacturing remains vulnerable to structural constraints. By that we mean logistics and electricity and uncertainties on the regulatory part, and yo-yoing between currencies, good currencies, bad, is too strong, is too weak, we're doing something about it, we are not doing something about it. So all of those structural issues also affects in an adverse way.
We have this inertia in I suppose our government process, but to me you've got to create the condition. We need a competitive rand. I was horrified to read in Business Report yesterday Praveen Gordon is saying, well, it's good to have a strong rand. And the paper also went on to say the debate on the rand seems to be over. No, it isn't. I think we're shouting out loud, if you want to get this economy going, give us a competitive currency and we'll create jobs. You cannot expect us to manufacture, for all the reasons we've had out there, with an artificial currency. Let me just give you an example. Electricity and manufacturing has gone up over 130% in 3 years, much higher than the Eskom tariffs. Now in that case, and the rand has strengthened by 30%. So how do you expect us to be competitive to compete with it? I believe now that our electricity is exactly the same price as Germany. which is a massive challenge. And the only way you should be able to regulate that is through an exchange rate which becomes more competitive. But our exchange rate is artificially strong because of liquidity in the international markets. So we've got to get that right. And if you ask me, what we should do is cut interest rates, do something bold and different. What is America doing now? You've heard yesterday, Bernanke the day before was saying, let's go QE3. You may criticize it, but they're doing something. Because if we're going to carry on what we're doing now, you're going to have the continued fail of small industries and then bigger industries and no investment. If anybody else can tell me what else to do, and if I was Jill Marcus, who's probably directed by the Minister of Finance, I would cut interest rates. It's not going to be inflationary. Inflationary is, at the moment, is cost push, it's not demand pull. In fact, demand is actually reducing. Let's do something different, exciting. And if you create the environment for the private sector will respond. We've got to do something differently. I mean, the other thing I'll come to this now. Other thing I was horrified. We find in the press now a call for a cadessa on economics. I mean, what a lot of nonsense. We've been talking in this country for millions of years. I mean, millions since '94. And now we want to discuss the economy again. What we need is leadership to take us somewhere. I'd hate to see a cadessa in terms of the economic policy, because you'll have the right wing and the left wing and have all these guys arguing. What we need is leadership. We don't need more debate.
At last, the point globally, the penny has dropped, that manufacturing, like any other business, if its scale diminishes below a certain level, then it collapses. It's not a question of a linear line. And America paid a heavy price for allowing in the 90s for its manufacturing base to dissipate. And now, for the first time in their history, no matter how much QE and QE2 and 3 and 4 they inject, they're not going to be able to pick up their employment level the way that they've been used to. Remember, US is used to unemployment reaching 3% was a national crisis. Now it's reached almost 10%, and no matter how much money they inject, jobs are not created. Why? Because the manufacturing base got pretty much dissipated. It went into the services sector, which is replaceable by technology. It can be digitalized. You can do your banking and insurance and a whole lot of other services through automation. Whereas in manufacturing and in agriculture, the limits are far less in terms of replacing technology for human beings. Now, China is very cognizant of that fact. They're not going to allow their manufacturing base to fall below a certain scale. India is, in fact, the opposite. They're hell-bent to expand their manufacturing no matter what, and so on and so forth. So why is that important? Because we have allowed our manufacturing sector to suffer for too long, and the chickens have come home to roost.